Welcome to Bloomberg Technology. I'm Emily Chang in San Francisco. Apple shares jumping on a Bloomberg report that the iPhone maker is preparing a dramatic shift to its own chips in its Mac computer, something it's been working on, laying the groundwork for a long time. This as businesses, cities, and states continue to reopen slowly across the country. The genetic testing giant 23andMe announcing a potentially groundbreaking discovery linking your blood type to the likelihood of getting COVID-19. We're going to speak to CEO Ann Wojcicki in a moment. Meantime, stocks abruptly halting their rally. Investors concerned the market might have gotten ahead of itself, given that we are still in the middle of a health, economic, and now a social crisis as well. Bloomberg's Kaylee Lines is with us now. And Kaylee, we are now officially in a recession here in the United States. What drove the stall in the markets today?
Well, it's really easy to see why the market would want to take a bit of a breather here. As you alluded to, we've gone so far, so fast, despite everything that's going on. Global stocks have added $21 trillion in value since the lows in March. The S&P 500, as of yesterday, actually turning positive for the year. And that's despite the fact that the earnings outlook isn't looking great. The economic data still, yes, it's better, but it's still pretty bad, all things considered. So you can see why investors may want to pause here and take a little bit of a breather, assess the fundamental picture and whether it really is time to be adding risk. That said, risk appetite isn't totally gone. You can see that reflected in the fact that the NASDAQ actually did close in the green today. The NASDAQ 100 actually briefly topped the 10,000 level, and you can see that the Information Technology Index, Communication Services Index, those growth sectors were actually able to eke out gains today as well. And the final thing I will say on the dollar, just a touch higher, would have been its 9th day in a row down. That has been a pretty good proxy for risk appetite. The fact that it was basically flat suggests that it wasn't an ultra risk off day, nor was it ultra risk on, Emily.
Meantime, Kaylee, Apple holding a virtual version of its Worldwide Developers Conference in a couple of weeks. Our colleague Mark Gurman reporting that they're preparing this dramatic shift to Mac chips, Apple chips in their Mac computers away from Intel. Apple shares ending the day up more than 3%. How much did Apple in particular drive the rally that we saw?
It drove quite a good amount of it. It was the biggest points contributor to both the S&P 500 and the NASDAQ, and that is largely on that idiosyncratic story you're referring to in regard to these chips for Mac computers that drove Apple to a fresh record high. But I will say that it's not just Apple in that mega cap tech space that rallied today. You also saw Microsoft, Amazon, Facebook. They all really carried the gains we saw in the NASDAQ in today's session.
So talk to us about the declines. What really dragged the market down?
What was interesting is we saw those kind of value cyclical sectors that had been leading the gains in recent weeks really kind of go back to the bottom of the barrel and lag in the broader market. That's true for energy, industrials, but also those beaten down travel stocks that had seen really incredible rallies, the likes of Hertz, the rental car company that, of course, declared bankruptcy last month. It was up 577% in 3 days, but it gave about a quarter of those gains back in today's session. You also saw the likes of American, Delta, Norwegian lower, as well as some of that optimism about the travel rebound has started to wane a touch. But the one note I will make is on Nikola, which is, of course, an aspiring electric and hydrogen fuel cell truck maker. It doesn't actually have any revenue yet. It's not actually supposed to make $1 billion until 2023. But that stock, since it debuted on the NASDAQ just last week, is up 136% in 3 days alone. So clearly investors are still looking to take some risks in the market. And that does beg the question of how much of the action we saw today was just a little bit of profit taking after this incredible rally, Emily.
All right, Bloomberg's Kaylee Lines, thank you so much for that update. Facebook also driving a bit of the rally today. Shares of the social network ending the day up 3%. This as Facebook and Mark Zuckerberg continue to face controversy about how they are moderating content on the platform. Mark Zuckerberg saying he's now taking time to review their current policies, but is it too little too late? Joining us to discuss, John Freeman of CFRA, Vice President of Equity Research. So certainly not the first content controversy that Facebook has faced, John, and not the last. What's your take on all of this?
Right. So, yeah, I think between now and the election, there's going to be a lot of noise, right? And I think there's, very well be, some interested parties, who want to contribute to that noise on both sides. But whatever happens, before the election is just that. It's just noise. Because whoever wins, obviously the regulatory situation will then be starkly different than sort of the a bit vague sort of superposition kind of situation that we see now. And I think that, there is a worst case scenario, right, that's out there. Everyone can kind of think of like, well, what if, Google and Facebook and social media need to be, liable for their content and have to hire these massive editorial staffs or something, completely sort of destroying the business model. But I mean, if you kind of really follow that logic through, I mean, we'd be wiping away, and I think the rest of tech would probably fall too. And you talk about, $1 trillion+ of, pensions and 401ks and things. So, I think the market is kind of, I think you've seen what Facebook, what the market has reacted. It seems like the investors have, pretty much shrugged it off. The regulatory risks, that is.
Now, Twitter shares. Twitter shares had been rallying. They're down today. Twitter, of course, taking an opposite stance on this post by President Trump, suggesting that looters be shot. That said, this has started, a new battle, opened a new front between the president and big tech. You really don't think it's going to matter once the election is over?
Oh, it'll matter. But what I'm saying is that whatever you're hearing, right? Whatever investigations are announced, or or executive orders are made, even like the last one, it was relatively it was completely toothless, really. So you know what I mean? Like I think there's going to be a lot of that sort of grandstanding, and we won't see the real situation on regulation until after the election. But I mean, honestly, there does need to be some adjustments to our laws, to reflect the internet era and perhaps different grades of publisher or carrier, right? I mean, that I think it would be very helpful for everybody, but I don't think the fundamental principles of of that kind of liability are going to change at all. Are going to change. I think these guys will probably compete on the basis of, hey, we don't censor at all, right? The Facebook Zuckerberg approach, and then Twitter's as well. When it crosses a certain line, and everybody can kind of then go to the social network that of which the rules they like best, I suppose.
So how concerned are you about regulatory risk to Google, Facebook, and let's throw Apple and Amazon in there? We know that federal regulators are taking a closer look at these companies for various reasons, including antitrust.
Right. I think so. On the antitrust side, I think that's a pretty tough argument to make under the current interpretation, right? Obviously, exceptions can be made, and I think there are ongoing investigations led by both the House and the Senate, right, that are ongoing and probably not going to be resolved until again after the election, and they'll come up with some real sort of substantive recommendations, and and there might be some more penalties and so forth. But like I said, I don't think the fundamental principles are going to change. I think that some maybe some guardrails get installed, right, and some clarifications made, particularly with regard to data privacy, right, that kind of thing. But
all right, John Freeman,
what I'm expecting.
Okay, John, always good to have you here on the show. John Freeman of CFRA, thank you so much for joining us. All right, coming up, can your blood type tell you if you are more or less likely to get COVID-19? New research from 23andMe says yes. We're going to speak to CEO Anne Wojcicki next. This is Bloomberg. Research from the genetic testing giant 23andMe found that differences in a gene influences a person's blood type. That influences a person's blood type can affect how likely you are to contract COVID-19. This is potentially very groundbreaking. Joining us now to discuss the discovery, Anne Wojcicki, the CEO of 23andMe. And so great to have you back here on the show. You've made some potentially extraordinary discoveries here, linking blood type to your susceptibility to COVID-19. Talk to us about what you found.
What we found, we're really grateful because our customers really rose to the challenge and they contributed to this research. So 750,000 customers took this survey. We have over 12,000 people who said that they had COVID-19. 2,000 of them said that they were hospitalized. So we were able to analyze this data. We found that the O blood type actually looks like it's protective. It's not a huge increase in protectivity, but it's 9 to 18% less likely to be infected and be severe. So it's an important step. And I want to emphasize, like, there's more research to be found here, which is part of the reason why we're still enrolling people in this study. We are offered, we're giving away 10,000 kits for anybody who has been hospitalized, who had COVID-19, in part because I really believe we have the potential to find, genetic associations that will help us know who's the most vulnerable, and then can we do more to potentially protect those people.
So it's obviously good news if you're type O, and I know it is very early, but have you found any clues, showcasing any trends for other blood types? I mean, anything preliminary?
It looks like the other blood types, again, O looks like you have a decreased risk, and the others all look relatively similar. So the important thing with biology and science is first trying to understand why is it that O looks like it's potentially protective in some ways, or again, you have less of a risk. So understanding that biology, and then will that help translate into, a genetic test that would help be able to identify people to say, hey, you should really be more protective, or help in vaccine discovery or in drug discovery in any way.
Now, what's so interesting about COVID is that it can spread so fast undetected, which means some people get very sick and many people don't get sick at all. And the question of the hour is why? Genes, and your research indicates that genes can very much play a role here. Are there any other clues about the role that your own genetics can play?
That's exactly what we're looking for, and looking to see, the asymptomatics would be really interesting. And that's why we're giving away kits, because those people are so hard to find. So we're saying anyone whether they're a customer or not, can participate in this kind of research. And I just want to add, a lot of infectious diseases, so things like norovirus, which is known as the cruise ship virus, there are genetic mutations that say these individuals are significantly less likely to get the disease. Even things like HIV, there's mutations that say people are significantly less likely to be infected with HIV who have this mutation. So we're looking for that kind of mutation that would help people understand whether or not they're potentially, significantly less at risk for getting infected.
Now, most of the studies so far have had a few thousand participants. Your study involved hundreds of thousands of participants, and still there's more work to do. So how do you go from a hunch to actionable information?
I think I'm really proud of my customers. Really, again, stepped up and rallied, and the hundreds of thousands, 750,000 people took this survey, and it shows the power of actually having a community like 23andMe. But at the same time, one thing I do need is more customers who have been hospitalized. So there's a period of time, we need to make more discoveries. The scientific community needs to vet it. They need to understand the biology around it. And I think over time, this will absolutely start to get integrated into how we're managing COVID-19. But it'll take a little bit of time. So the first for us is making sure that we have more people who actually were diagnosed and hospitalized with COVID-19.
So how do you imagine using this information? Are you exploring any potential drug development as a result of it?
We are not. We made a decision that infectious diseases is not something that 23andMe has the team for, the background. So we are not pursuing that. We're absolutely happy to work with partners who potentially are pursuing that. We're eager to say we're going to, collaborate with the academic world, and are there partners potentially where it's useful for the drug discovery or vaccine development world. I think the nice thing that's happened here, the science world has come together.
So would you look at or explore collaborations with drug makers in some way, and what might that involve?
Well, we have a broad collaboration right now with GSK. So GSK has been our partner. We signed this in 2018, specifically looking at, drug discovery from the 23andMe community. So that would be our first group. And GSK actually announced that they have a large partnership. So again, the first step for us as a company is to, put out this announcement, and we felt the rush because it's so important for our customers. Second for us is to publish this in a peer-reviewed journal, and then look to see, are there people who want to partner with us around vaccine development or drug discovery?
Now, there are other companies looking into what your blood can tell you about COVID as well, specifically how severely you do get sick if you contract the disease. How could that research sort of fit into what you're also doing? And as you mentioned, the scientific community coming together, is that something that you're watching as well?
I think as we build up the community of customers, like one thing, again, we've been able to do with our customers is reach out again and go back to them. So for instance, if another team found that there was a protein biomarker or something else in the environment that we wanted to test, we could potentially reach out to our customers and see if we could collaborate there. So it's early days, but it's exciting that this blood type looks so real, that there is a reason why O type seems to be, you are less susceptible to developing COVID-19 because of this blood type. So we will absolutely start to collaborate if there's something that we can do. But the next step for us focusing on it is continuing to pursue genetic findings, and we can do that when we get more data.
Meantime, the government has to clear the way in order to make sure that scientists make progress, that vaccines are developed. We know, and I know you've had your own experience with U.S. bureaucracy and the FDA. How confident are you that the Trump administration can clear the hurdles that need to be cleared in order to make real progress as fast as it needs to be made in the middle of a pandemic?
I think we've had a lot of experience now working with the FDA, and the one thing that I've taken away is that the FDA is filled with people who are incredibly talented and they can react at the appropriate times. And vaccine development is, again, there's all kinds of data out there about it normally takes a while. So everyone is rushing, but also the worst thing would be to put out a vaccine that wasn't safe and it wasn't effective. So there's a balance between the speed, but also the need to actually have a product that works. So I believe the FDA absolutely has that ability, and they've been really responsive with groups in terms of partnering about what's the most appropriate way to move forward.
Now, we're in the middle of not just a health crisis, but an economic crisis, and now a social crisis as well, as protests continue across the country over racial injustice, police brutality, the death of George Floyd. I know that these are issues that you're extremely passionate about. What can we do to change? What are you doing to change? And how do we hold ourselves, our companies, and our leaders accountable?
I think the most important thing for every company, and actually not just a company, just people in general, is to take a step back and actually recognize that whether we realize it or not, we're doing something wrong. And the most important thing we need to first do is recognize that there's an issue, and then listen and hear the stories. Like, as I've been hearing stories, like, I feel awful in that there's been this systemic problem, and even within the company, that we haven't necessarily addressed. It was just sort of accepted. So we put out an email. I very publicly came out and said, look, we have a problem, and that I have no one who is Black who is over director level or above, or on my board. And that's an issue that we need to change. So we focus now on, identifying these 4 pillars of what is it that we can potentially do. The first one being hiring. What's our hiring practice? And is the funnel wide enough? Because LinkedIn says that over 70% of people come from a network, a connection. So we all have to broaden our connections. Second is the employee experience. Are we doing things within the company that potentially are creating microaggressions that don't create a safe space for people? Are there things that we're doing? And we have found, yes, there are things that we can actually improve on. Third is the community impact. Are we supporting the pipeline of people who could potentially come to the company? And are we supporting a diverse pipeline? And second, am I partnering with companies that also have diversity? I can make decisions about who I do research with, who I buy supplies with, and are all those partners also accountable? And do they have diversity there? And last is looking at our own product and recognizing that our product is relatively Eurocentric right now, and we have an opportunity to broaden that to support all populations.
Meantime, it's certainly not just a 23andMe problem. It's an America problem. It is a Silicon Valley problem. I mean, specifically with regard to this crisis, we've seen, big tech companies from Google to Facebook, problems with misinformation about COVID-19, and yet so important in keeping us all connected as we shelter in place. So important to, share these stories, these devastating and passionate stories of change happening across the country. How do we find a balance for these companies in terms of using their power for good and curbing power when necessary?
That is a tricky question. And I think that there's a lot. In some ways, I think every company has the spotlight shining on them right now about what do they stand for. And I think it's going to be really important to, I think about this a lot. What are the decisions that we're making today that we'll look back on and say, were we part of the future? Did we do things that actually help set up the right kind of future that we all want? So I think there's a lot of, looking at how is it that we are managing this incredible amount. Again, it's never happened before. The amount of data coming in online and all the discussions is a challenging problem. But I think companies, like I said, have a responsibility to recognize what do they stand for.
Do you think that COVID has changed your trajectory as a company at all? And if so, how?
I think COVID has changed 23andMe in the capacity that people are recognizing two things. One, the importance of prevention, because you can't easily go for months. We couldn't easily go to the doctor. So 23andMe is a lot about, identity, learning about your genetics, learning about your health risks. But the reason to learn about your health risks is because there's an opportunity to prevent disease. And so we've seen our customers are engaged, and there's been a resurgence of people logging in and coming in and wanting to think about what is it that they're at risk for and are there actions they can take now. Second, I think that fundamentally healthcare is changing because of the boom in telemedicine. And one thing that we've always said is that the old days were about a one-to-one connection between you and the doctor. And frankly, those days are over. You have to find additional ways to get care. And is that going to be through online? Is that through a group setting? Is it through telemedicine? Is it chatbots that are coming? So there's always going to be a need where you have to connect with a physician in person, but there's a whole opportunity for keeping people well at home that can leverage the internet and telemedicine and this sort of remote connection opportunities.
What are your biggest concerns, Anne? Obviously, there are so many, we're going through so many things right now, whether it's, the health crisis, the economy, layoffs, people fighting for jobs across the country, these protests. As we come out of this and start to look at kind of a new normal, we've got about 30 seconds left. What are your sort of biggest concerns about lessons we might not actually learn here?
I think I tend to be an optimistic individual, and I frankly feel optimistic because there is so much unrest and change and everything. There's a massive upheaval going on. So frankly, the world is going to be different. And what I think the most about, it's our opportunity to lose. So we got to make those changes.
Absolutely. Anne Wojcicki, CEO of 23andMe, thank you so much for joining us. We'll be right back with more of Bloomberg after this quick break. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Several countries across Europe and Asia are using their own contact tracing apps to track the spread of COVID-19. But here in the United States, regulators have raised concerns about privacy. One example, the state of New York, now working with Brittany Kaiser, the whistleblower of Cambridge Analytica and that Facebook scandal, to introduce a new bill to curb privacy and data issues. I spoke with Kaiser earlier today. Take a listen.
We want to be able to save human life in the midst of a global pandemic. So just like we all have decided to stay at home, we've decided to obey other regulations to quarantine ourselves, we should also be interested in using contact tracing so that vulnerable people can be warned if they have been exposed. The main problem is that many of the big companies and governments that are implementing contact tracing apps don't have a great history of respecting data protection and privacy. And the governments that are encouraging people to opt into these apps have not implemented data protection legislation or regulation that will protect citizens' privacy and how their data is going to be used.
You've been working with New York on an emergency bill that was introduced to state Congress about how to regulate contact tracing data. What are you proposing?
We're proposing that people have a clear and explicit opt-in so that they understand what they are giving their data away for, how long it's going to be held, who is going to get access to it, what it can be used for, and if it's going to be monetized, that the individuals that have opted in would have some ownership over that value. We're also explicitly looking, for instance, because of the past week and a half or so, to ban law enforcement from getting access to that data. I think there's been a growing concern with the peaceful protests and violent riots that have broken out in hundreds of cities across the nation, whether or not law enforcement will be using contact tracing data in order to track protesters and perhaps prevent the peaceful attempt trying to make a difference.
You worked at Cambridge Analytica, which became a flashpoint over their misuse of user data that they got through a Facebook integration, potentially undermining the US presidential election. How has that experience informed your views about contact tracing and data privacy in general?
What I learned at Cambridge Analytica is that there's a big difference between what you can legally do with data and what you should ethically do with data, which is why I've been spending so much time working with legislators to prevent the abuses that I saw in the 2016 elections. So we are trying to implement new laws and regulations to make sure citizens are protected, but technology innovation can still go forward as long as it is done in an ethical and moral way. I obviously have a lot of quandaries that I've had to deal with in the past few years in this realm, and you can obviously read more about it in my book, Targeted. And if you've seen The Great Hack on Netflix, that also explains further why you cannot allow private companies or even governments to do whatever they want with personal data. We need to assert our rights in a legislative infrastructure that is easy for both companies and citizens to understand.
You've been speaking with regulators. What are they telling you?
Many regulators are concerned that if we make contact tracing apps explicitly opt-in only, that they're not going to get enough participation. And of course, I completely understand that, and I want the entire infrastructure of contact tracing to work in order to save human life. And that's why we are working very hard in order to balance the need for innovation, in order to serve our medical and societal purposes, with the need to protect our fundamental rights and freedoms.
Now, on that note, technological contact tracing sounds amazing in theory, but it's actually still a very hard technological problem to pull off. I mean, how much progress has actually been made in terms of doing this successfully? Like, will it really work at the end of the day anyway?
If we get enough citizen participation, then yes, it can work. There are multiple governments across the world who have had millions of people already opt in, and those individuals are successfully getting notifications if they have come into contact with somebody who is found to be COVID-19 positive. And I think that's a very great use of showing people that sharing their data can be safe, it can be for the public good, and there is a way to understand what it can and can't be used for. But again, a lot of these countries do not have laws that protect the citizens that opt in from their data being abused.
Now, meantime, speaking of other countries, you've got Singapore, Hong Kong, Australia, Israel, France, all working on their own contact tracing apps. How would you compare their approach and the progress they've made to the United States, which has been kind of late to the game?
I would say that there are some governments that have never really respected the privacy of their citizens, where data ownership and data protection is not really a conversation. So those governments have been able to access data without getting the opt-in of citizens, which is not possible across Europe. It's not possible in the state of California or really under the legislative frameworks that we in the US are working toward. So therefore, it's important that we can make sure to inform and make citizens aware of what these apps are.
In order for it to be pulled off technologically, Google and Apple, two big tech companies that also compete, have decided to work together in sort of an unprecedented partnership for contact tracing, specifically for COVID-19. Do you have concerns about that?
I have plenty of concerns about that. Obviously, on one hand, you can see how we're all in this together is the spirit of them finally deciding to work together. And if we can save human life through them collaborating for the first time, then that's a brilliant use of technology innovation. But of course, two companies that do not have a great history in terms of respecting privacy are now able to combine data sets that they have not been able to access before in the other company's firewalls. So I think it's incredibly important that we get through first in the state of New York, Senate Bill number 8448, as well as the federal legislation that has been introduced to Congress last week.
So on the Apple and Google partnership specifically, what do you think the biggest risks are?
I think the biggest risks are that Apple and Google especially have not yet taken seriously a lot of the problems that have come up in the past few years with protecting people from data targeting, data manipulation, fake news, and targeted disinformation. These are all issues that we have not fully addressed yet. So the idea that further personal information is going to be collected in an unregulated fashion should make not only the privacy community nervous, but any citizen that cares about their own right.
Brittany Kaiser there, former business development director at Cambridge Analytica and also the co-founder of the Digital Asset Trade Association. Moving on now to electric vehicles and one of the biggest electric vehicle companies that you probably haven't heard of. It's called Nikola. It's an electric trucking maker whose shares have surged over the last week since it debuted on the NASDAQ in a reverse merger. With more on the company and what it's doing, Bloomberg's Ed Ludlow is with us. So, Ed, what exactly does Nikola do and what is it hoping to achieve?
Well, Nikola hopes to eventually make fuel cell electric vehicles, which different from the battery electric vehicles that you know from the likes of Tesla. They use hydrogen, and the hydrogen is the source of fuel that's actually stored in the semi-truck, and it's broken down to form electricity, which powers the electric motor. And what's been so interesting, digging into this company over the last couple of days as the shares have been so crazy, is that they're actually openly a long way off from doing this, right? They say that they won't start producing these fuel cell electric vehicles until 2023. And in the meantime, what they plan to do is, in partnership with an Italian industrial company called CNH Industrial, is build a battery electric version of their semi-truck, which they're going to do as a 50-50 joint venture in Germany. And the last kind of complicated thing about it is a lot of the buzz around the stock of the last 2 days has been around an electric pickup truck. Electric pickup trucks are all the talk because of the Tesla Cybertruck. We know that Ford eventually plans to do an F-150. But anyway, when it comes to Nikola, they have a design for an electric pickup truck called the Badger, and reservations are supposed to open for that on June the 29th. But here's the thing. When we trawl through all of the company's filings over the last few days, it says clear as day in their S4 filing that Nikola won't be making this pickup truck unless it finds an automaker partner, an automotive partner, who will build it for them. And when I spoke to the company, I put that to them and said, hey, a minute, what's the plan with this? They said that they're going to announce a partner soon, but they wouldn't give me any other details.
Ed, this is a company with a $28 billion market cap right now. What makes it worth so much?
I've been trawling through the financials, and it's really interesting to look at. The company says it has 14,000 reservations for semi-trucks of different types, the fuel cell semi-trucks mostly. And they say that represents around $10 billion of what they call realizable value. But if you look at the small print, the fine print, those are not binding reservations. There's no contract in place. They didn't even take a deposit for them. So what the company says it's doing now is working with those people that did make reservations, and they include reputable companies like AB InBev, the brewer, an alcohol company, to make those contractually binding. But, you know, they raised $500 million before they listed, before this reverse merger deal that happened. They raised around $250 million additional funds through that complex reverse merger and listing. So they raised about $750 million in total. They have some interesting financials. I think that they have lost around $188 million since inception. They have around $80 million of cash on hand, which is not a great deal of cash. And so it does raise a lot of questions, because as I've been covering all of these EV startups for the last few months, many of them have raised significantly more funds than that, and they are significantly further ahead. We know that Nikola eventually plans to break ground on this huge 1 million square foot EV factory in Arizona, but right now it's not entirely clear where they're at with that, you know, how their finances are, and they don't even expect to generate a real revenue for another couple of years. They certainly don't expect to make any money this year.
All right, Bloomberg's Ed Ludlow, thank you so much for your reporting and bringing us a new story. Always good to have you here on the show. Okay, coming up, the quest for coronavirus drugs and vaccines is accelerating. Where are we now? We'll bring you the latest next. This is Bloomberg. Another company going public this week, and that is Vroom, an auto sales platform soaring 116%, as much as that in its trading debut, racing past its earlier goals. Earlier, the CEO of Vroom, Paul Hennessy, sat down with Bloomberg Television. Take a listen to what he had to say.
I can't comment on pricing. What we're obviously, thrilled about and humbled, quite frankly, is the enthusiasm that we had from investors throughout our testing the waters process, throughout the roadshow itself, and now as we've gone into the public markets. I say humbling because it makes us want to work even harder to actually deliver for our customers and deliver value for our enthusiastic shareholders. So yeah, so we're humbled and happy with the outcome. So,
Paul, I mean, what's the general business model here? Because when I look at Vroom, I look at other sites like, CarMax, Carvana, and a few others. They all seem to offer, at least at its core, the same service. But around the edges, there are some differences here. And I'm wondering if you can explain what the differences are with Vroom.
Yeah, I'd be thrilled to. Vroom is an innovative e-commerce platform. So that means we built a best-in-class e-commerce platform right next to a best-in-class vehicle operations platform. And then we built the entire business stitched together on a data science and experimentation platform. So what that means for customers, right? Broad selection of cars at transparent prices, delivered to their driveways, and now, and more important than ever, in a contact-free way. And for sellers, right, because we're operating on both sides of this marketplace, for sellers that are looking to sell us their car or trade in their car, the beauty of that model is they can load in their license plate or VIN, get a real-time offer, say yes, and we'll dispatch a truck to pick up their car and funding for the car. So we've really taken the friction out of the experience, and that's why customers are really leaning in. We were growing at approaching 150% on e-commerce units, and nearly 160% in e-commerce revenue in the first quarter. And now, even since COVID, we think that there's a tailwind as more and more customers are leaning into our model. So
let's talk about that change and what the coronavirus, for the great clouds that it presents many, it must offer a silver lining or two for the e-commerce business that you've built. Talk to us about how rampant you see demand and how you do hope to sustain it once markets reopen and people can get back into a car showroom?
Sure. We believe it's a structural change. You know, the massive market that we're playing in here, call it $841 billion in revenue, 40 million units annually, and yet it only has less than 1% e-commerce penetration. And so what's happened now is consumers don't want to go back out into the public, back into the traditional dealership models. From the comforts of their own home, they can reach into their pocket, pull out their phone, have a car, do everything you could possibly do in a dealership, financing, vehicle warranty extension, and then have the car delivered.
Yeah.
And so what we've seen since the global pandemic is that customers now are significantly more likely to buy a car online. In fact, data suggests that it's doubled. So the market's coming our way, and we've got a really nice tailwind in our business.
So the consumer preference for potentially avoiding the dealer, or at least doing in-person transactions, that certainly makes sense. What is sort of the trend line that you're seeing with regards to just overall demand? Prior to COVID-19, we had seen a lot of data that seemed to suggest that car sales growth had sort of plateaued, and that people were looking to car sharing and public transit and other forms of transportation other than owning their own vehicle.
Yeah, there were moments in early March where we saw a demand decline, I think, as everyone was starting to figure out what are the implications of the pandemic. But then, you know, as people were doing more stay at home kind of under orders, we saw demand pick back up into our business. Because we're an e-commerce business, because we're incredibly agile, we were able to move through inventory, sell that inventory at a profit, then come out on the other side of this market and then be buyers in a decreased priced market. That's good news for Vroom, and then it's good news for Vroom customers. So again, high interest in the model, and again, we think that's structural.
Vroom CEO Paul Hennessy there. All right, coming up, it's been a year since millions of protesters gathered in the streets of Hong Kong. We're going to get an update as U.S.-China relations continue to sour. That is next. This is Bloomberg. Some quick breaking news to tell you about. Hospitalizations from COVID-19 in Texas have hit their highest level since the pandemic began. We know that Texas has been a bit more liberal in reopening more quickly, coming out of the shelter-in-place orders across the country. Again, now virus hospitalizations, they're hitting their highest point since the pandemic. That's something that we are going to continue to follow. Turning now to Hong Kong, it was a year ago today that hundreds of thousands of protesters took to the streets of Hong Kong, defying warnings of police and unlawful assembly. Hundreds of protesters taking to the streets in Hong Kong today to mark the one-year anniversary of the first major march against the since-scrapped mainland extradition bill. Police arrested 25 protesters as they disrupted evening traffic. This as dozens of officers in riot gear tried to disperse the crowd. So what is next? I want to get to Bloomberg's Yvonne Mann, who is in Hong Kong. And Yvonne, so much has happened in the last year. Of course, most recently, this controversial new security law imposed by Beijing. What is next for the pro-democracy movement, especially if Beijing doesn't back down?
Right. That's the key question here, given that organizers of these events haven't been able to draw the same crowds of people that we saw a year ago. This was a much smaller crowd on Tuesday night of a few hundred. You mentioned about them blocking off roads. Police had to fire pepper spray, according to some reports there. But you compare it to 1 year ago today, it was a much bigger scene where we saw 1 million people hit the streets over this extradition bill, which eventually was scrapped. But it did kick off months of protest. This movement has now evolved to so much more, a fight for democracy, and now, as you mentioned, this controversial national security legislation that China pushed through, so raising more concerns about the city's autonomy with the mainland. So perhaps there has been some protest fatigue, Emily, and the pro-democracy front has lost a bit of steam here. There are some, including tycoons like Li Ka-shing, banks like the HSBC, which have come out in support of this bill, believe that this legislation will help stabilize and revive the economy. The government in Beijing has also tried to explain to the Hong Kong people that it's not to compromise freedoms here in the city, that they can ensure freedoms will be granted to the city beyond 2047. But the pro-democracy front saying they still have momentum. They could be planning something in the works in the near future as well, Emily.
There's the irony of President Trump supporting the protests and the calls for freedom in Hong Kong, given how he's handled the protests across the United States. Do you see Hong Kong becoming more of a sticking point between Beijing and Washington as this, détente that we'd had for some months now is being exploded?
Yeah, and you could say that President Trump potentially is losing that moral ground to continue their fight against here in Hong Kong. You may remember that press conference just a week or two ago to announce sanctions on China over the Hong Kong issue. That seemed to have more bark than bite. But the Hong Kong issue could actually be a catalyst, as some guests have told us, to escalate tensions further. We just heard from U.S. senators urging the U.S. to take in Hong Kong residents who want to flee the region, saying that some Hong Kongers are no longer safe living there and are seeking refuge outside of the region. And this follows what the UK did as well, proposing to change its immigration rules to make it easier for Hong Kong people with British national overseas passports to seek refuge in the UK. So you certainly see some angles of this fight bubbling up once again.
Meantime, there are continuing concerns about how China overall is handling the pandemic. Can you sort of give us an update on the very latest in Hong Kong?
In Hong Kong, it seems like when it comes to the virus, things have been relatively tame. In fact, we saw maybe a recent cluster of cases that was locally transmitted. At this point, it doesn't seem like it's as big of a concern. In fact, they've been able to keep a lot of the imported cases. They stop them at the airport. People get tested, and if they get positive results, they then get sent to hospitals. So they've been able to kind of put the stop to it at the airport. So certainly when it comes to the virus front, Hong Kong is succeeding.
All right, Bloomberg's Yvonne Mann in Hong Kong this morning for you, Yvonne. Thanks so much for waking up early for us and for joining us for that update. That does it for this edition of Bloomberg Technology. I'm Emily Chang in San Francisco. Bloomberg Daybreak Australia is next. This is Bloomberg.